In corporation tax, the video number 1, what we discussed, how to calculate TTP and how to calculate corporation tax liability, yani 19%. And in video number 2, which is a bigger one, we discussed how to tackle with income, and the focus was trading income and capital allowance. In that one, we learned a new concept, super allowance in capital allowance as well, which is a very more you can say very important topic for this attempt because it's a new topic. Okay, now we will continue the corporation tax and inshallah we are going to finish it. The thing is interest income. You remember in individual we discuss savings income. What is saving income? Saving income is just like interest, and in individual we have types of interest, like interest from ISA, interest from guilds, like we already discussed the bond washing, we already discussed the types of interest, and there was no computation. There was no computation of saving income in individuals. Just we have to consider it. Is it exempt or is it taxable? Is it come in the format or it will be written exempt? Simple is that. And the bond washing was there, for which we have some small accrual based calculation. That was individual. That was individual. Now we are going to discuss the saving income or interest income for companies. So for companies, first of all, before learning the income, we have to take care of the loan. The reason of the loan, we can say it loan relationship. What we are going to say it, loan relationship. Now, what businesses are doing? Businesses are taking loan for trade purpose. Companies, no? Companies can take loan for trade purpose, or company can take loan for non-trade purpose as well. In individual, there is nothing like that. It's only part of corporation tax. If company is taking loan for trade purpose, if you are taking a loan, definitely you have to pay. You have to pay interest, right or wrong? Hello? Right? So if your loan purpose is trade related, for example, you took a loan to purchase plant and equipment, you took a loan to purchase some office, factory, warehouse, shop for business, you take a loan to finance your trading activities, you took a loan to on loan notes to fund the company, yani you issued debentures, you issued loan note, these all are trade purposes. The simple concept is, if you took a loan for trade purpose, yani you took a loan for trade purpose, you have to pay interest. You have to pay interest expense, right or wrong? And this will be allowed expense from trading income. Trading income, we learn net profit. We start from net profit or profit before tax. We are adding, allow, adding less, add less, allowed, not allowed, allowed, not allowed. We already knows that. So if you took loan, if you took loan to finance your trade, to finance your trading activities, the interest expense will be allowed expense. The interest expense will be an allowed expense. Any question? If you took a loan for non-trade purpose, which purpose? Non-trade purpose, again you have to pay interest expense, but this interest expense is, but it's not allowed. It's not allowed from trading profits. For example, if the loan is not a trading purpose and interest expenses already deducted, like depreciation, which is not an allowed expense but it's already deducted, what we are going to do, we are going to add it back. What we are going to do, we are going to add it back. Yani, if you took a loan for trade purpose, the interest expense must be allowed. Yani, it should be deducted from your trading profits. But if a loan is taken for non-trade purpose, if a loan is taken for non-trade purpose, means owner took a loan to buy his personal car. This is not a trade purpose loan. If this is the case, the interest expense will not be an allowed expense, and not allowed expense have to be added back in net profit. This is the theory, or you can say this is the concept of interest expense in corporation tax. Any questions?
No question.
Sorry.
No question.
Okay, you want to note it down? Now
I know.
we will discuss interest income. Yani, if you give loan, this time you are not taking a loan. This time you are provider of a loan. If you are a provider of a loan, again two reasons: trade related and not a trade related. See, in our course, trade related, which can you think and tell me who has interest as a trade? Which institution is doing business of interest? Banks are the institutions who are providing loans to earn interest, and it's their trade. And it's their trade, right or wrong?
Right.
Hello?
Yes, right.
And this part is not in our course because examiner will not give you a question in which a company is a bank. Okay, so trade related is outside. If you are providing a loan which is not your trade, yani you are a business but you give some loan to someone, is it fine? Businesses are providing loans. So if you are providing a loan which is not a trade related activity, which is not a trade related activity, so you are earning interest on this, right or wrong? So this interest income should not be part of your trading profit. It's not allowed to add it in trading profit. It must be reported separately. How to report separately? I will tell you. Report it separately. First of all, this one, that if interest income from not a trade related activity is given, what you have to do? If it is part of your trading income, first of all you remove it. Just remember the individuals: property income, interest income, dividend income. These are separate category of incomes. If they are part of our trading profit, what we are going to do? We are just removing them. Yani we were deducting them. Same thing happens here. If interest income will be part of your trading profit, you have to minus it. You have to remove it, and separately it will be reported in TTP working. You remember the TTP working? In the TTP working, it will report it separately. Got my point?
Got
Okay, now we have a small question. Okay, please read the question.
Trinity Ltd, a clothing manufacturer, received bank interest of 2,800 pounds on 14 December 2021 and paid loan note interest of 19,500 pounds to other companies on 26 September 2021. The loan notes were issued in January 2021 to raise finance for the purchase of a new packaging machine and is therefore a trade-related loan. The company prepares accounts to 31st December each year. Accrued loan note interest payable at 31st December 2021 was 9,000 pounds. There was no interest receivable at either 31st December 2020 or 31st December 2021. Explain how the bank and loan note interest will be treated in the corporation tax computation for the year to 31st December 2020.
Okay, now, first of all, Trinity is a clothing manufacturer. What he is doing?
Clothing
Clothes
manufacturer.
manufacturer. He received bank interest and he paid loan interest. Okay, so there is interest income as well and there is interest expense as well. So in corporation tax, he need us to explain. The calculation question will come following this question. First of all, you have to categorize it. The first category will be bank interest is income. So we are not writing income here. What we are going to write in for income, we are writing receivable, and for expenses, we are writing interest payable. What we are going to write for in expense payable. Okay. Now, one by one, we will discuss. First of all, tell me, he received the bank interest, right or wrong? Hello.
Right. Yes.
So is it the trading income or no? Bank interest
This trading
will be taxed, or you can say will be taxable as non-trading income, right or wrong? If it is, this means what? This means that if this interest is part of your net profit, if it is already added in your net profit, what you have to do? You have to remove it. You have to remove it, right or wrong?
but how
And
did we know that is a non-trading?
sorry, hello.
So this is a trade purpose income or non-trade purpose income?
See, what you are doing, you are clothing manufacturer and you are receiving interest from the bank, right? Receiving interest from the bank. What is the reason why bank is giving you interest? Because you have money in the bank, right or wrong?
Right.
Interest income for the trade. See here, look here. Interest income as a trade related is not a part of our course. Whatever interest we are going to receive will always be a non-trade related activity. Got it? Hello.
Yeah, got it.
So this interest is not trading activity. And while we are calculating TTP, what we will report? We will report it separately. Yani interest income of 2,800 separately reported in TTP computation. Right or wrong? In our TTP format, we have trading income, then we have interest income, then we have others, property income, and then we are deducting QCD. In this format, it will report separately 2,800, correct? Hello.
Yes, it will be recorded separately.
No, sorry, what you said?
It should be recorded separately.
Okay. We will record it separately as a name of interest income in the TTP computation. Okay. Now,
Okay.
interest payable. Here the interest payable is for loan note. What is loan note? Why company is issuing loan note? See the reason here. Can you read the reason, please?
For the for the
Purchase
purchase of a new package.
packing machinery, right? And we are doing clothing business. So is it the business activity or no?
It is a trade related.
Definitely business. So this will be trade related, right or wrong?
Right.
So this trade related means what? Will be allowed or not allowed? Allowed
It is
expense
not allowed.
in trading profit because it's trade related. So trade related means it must be deducted from your trading income, right or wrong?
Right.
Sorry.
Yes.
So now computation. First time now we are going to compute it. There is a paragraph. What they said. Just read it, please.
The second paragraph,
Yeah, this
the
one.
third, says the company prepares accounts to 31st December each year, and accrued loan notes interest payable at 31st December are 9,000 pounds. There is no interest receivable at either 31st December 2020 or 2021.
Now see how much interest we paid. How
Paid
much we paid?
19,500.
19,500. Now there is a format. Okay. First of all, I will take the figures. 19,500 we paid. And from the paragraph, you can see there are the opening and closing balances, right or wrong?
Right.
This 9,000 is the opening balance or is the closing balance?
It's the closing balance.
Closing balance. And this is the format. Yani, if you learned the accrual at your earlier studies in financial accounting, same thing happening here. BD is deducted, paid and CD will be added, and the answer will be allowed expense from your trading income. 19,500 plus 9,000, it will be 28,500. And this is the amount which is an allowed expense, which is an allowed expense. Allowed expense means because it's a trade related loan, it's a trade related loan, so the interest of the loan, so the interest of the loan will be allowed. Will be allowed means will be deducted from your net profit. You got my point?
Okay.
And the allowed amount will be calculated as per the formula. The formula is interest paid plus closing balance minus opening balance. Interest paid plus closing balance minus opening balance. Okay.
Okay.
Please, sorry. Hello.
Yes, hello.
Yeah, please note it down. Now, there is a question. This is a different style question. Okay, but it's not difficult. First, I need you to read the question, please.
EQR Ltd prepares its account to 31st December. The company issued £100,000 of 12% loan notes on 1st May 2021. The proceeds of the issue were used to purchase a new factory, which is a trade-related loan. Explain how the interest on the loan notes is treated for tax purposes for the year ended 31st December 2020.
I think it's a very piece of cake question. You can see which date they issue the loan.
On 1st May.
How many months in the year end? Because companies are not following tax year, companies are following the year end, right? Remember the video 1 and video 2 of corporation tax. So the
It's
100,000
12 months.
at the rate of 12% percentage is for the year. How many months? May, June,
8
July,
months.
August, September, October, November, December, 8 months. So the interest amount, or you can say the interest expense, is how much? I think it's coming 8,000. Now we don't have BD, we don't have CD. Paid amount is 8,000. So the final answer is also 8,000, right? My question to you, this loan is
Yes.
business related, trade related, or not a trade related?
Trade related.
Interest on trade related loan. So means it's an allowed
Now it's
expense from trading income. Yani if it is already deducted, no need to do anything. But if it is not deducted, you have to deduct 8,000. Got it? Okay. This is a very good question of trading. You can say the in this one we have trading income, we have interest, we have everything, and we need to calculate TTP. Again, we are reaching back to the workings of TTP. Okay. Now the first thing in this question, we do have the trading income. How much? Which is we can say profit before tax. In the company we are writing profit before tax, and in individual we are writing net profit, right? 105940. Tell me, depreciation allowed or not allowed? Depreciation is not an allowed expense. So what we did, we are going to
added by
add it back. Correct. Now other one, loan interest, which is what?
trade related.
Trade related. So what is the adjustment of trade related?
Should be allowed.
Should be allowed. Loan note interest. Allowed means it should be deducted, and it is deducted. So no need to adjust anything. Am I right? Then we have bank interest payable. The reason of bank interest is number 2. Is it trade related or not a trade related? What do you think?
It's a non-trade related.
Not a trade related. So not a trade related should be deducted or should be added back like depreciation?
It's a not allowed expense. Should
Not
be
allowed
allowed.
expense. How much?
6,000.
Okay. And what else? Income
Bank
can
interest
never
receivable.
be part of this, because interest income can never be part of trading income. So it will be subtracted or
Subtracted.
deducted because interest already added, so we have to remove it. And do you see there is a capital allowance in this question or no?
Yes.
This will be known as adjusted trading profit. And we
But
have,
we're not gonna
sorry,
are we not gonna calculate from the note one? It says bank interest
this
receivables
calculation
payable.
no need. This calculation will be needed when we are going to calculate TTP. Just now we are calculating trading income. Allowed, not allowed. Which supposed to be here, leave it. Which supposed to not to be here, remove it. Just we are doing this. We are doing trading income first. After we will go to TTP, we will consider what you are thinking, note 1 and note 1. Okay, this is not considerable when we are calculating trading income. That's why we are doing this question, that in exam when we have other incomes and trading this, how to solve it. Okay, so tax adjusted trading profit is how much?
Adjusted trading profit before capital allowance is 106420.
106420. And after?
94620.
Okay, 94620. Is it correct? Till here any confusion? Now I am going to calculate TTP. Okay, the format of TTP. This is done. Now the format of TTP is tax adjusted trading profit working. This is the working. Okay, 94620. Then we have interest. We have interest, and in the format, if you check the handout, it's written investment income or interest. What we are going to do, we are going to do a working here. First of all, trade related, leave it. Just you will focus on non-trade related items. Okay, we have two things. One is bank interest, which is income or expense, and we have one which is an expense. Right or wrong? The non-trade interest expense is 6590. This is an expense. And the non-trade interest income will always be non-trade. We have this one. We don't have any BD, we don't have any CD, or we do have. What do you see? You can see or no? This one BD and CD. Hello.
Yeah, hello. That's
Yeah.
what?
Now income, non-trade related interest income and interest expenses in front of us. Now we are going to read the note number 1. Please read note number 1.
Bank interest receivables included a total of £2,340 as at 31st December 2021 and £1,210 at 31st December 2020. There were no accruals in respect of the loan note or bank interest payable at either the beginning or the end of the year.
Okay. Now very carefully, I need you to check this one. This is what? This is the format, right? This is the format. I'm just copying the format here. Again, just I'm writing a format just for explaining you something. BD, paid, and CD. Right or wrong? That was the format. And the answer, what we are calculating is known as the payable amount, is known as payable. Right or wrong? Now,
Right.
if I am calculating this one, just look. Bank interest receivable, this is receivable, leave it. For the payments, we don't have BD, we don't have CD, we have this, which is the same amount. Right or wrong? So this is the final answer. For the income, BD, received, CD, and receivable. Very carefully look the screen, please. Tell me what is the BD and what is the CD. Read this. Am I right? Now I was saying that we have BD 0, CD 1210. Am I right? Hello? The BD and the CD, I wrote it correct or no?
For the income one,
Yeah.
shouldn't
For the income side, yes.
1210 should be the balance brought down?
See, this is the date. Okay, let me correct it. Approval of this at this and this. Okay, let me correct it. 1 second. So the BD is how much? 1210 and the CD is 2340, right? What is the amount interest received?
860.
Sorry?
15,860.
What is the name of this 15,000? I need you to read it.
Receivable.
And what we need?
Received.
We need receivable and receivable is given, so no need to use the format in this question. That was the trick. We have to remember this format we are using when this receivable and this payable is not mentioned in the question. If you can see the previous question, I will check. See here, I'm just highlighting for you. Just look this one. Here you will see that I am using the format. I use this format, right? But here you can see the amount, which is 19,500. What is the name of this 19,500? Just read this one. 1 second. This one. The loan note interest, this 19 is what? Is what? See? Is paid. It's not the payable. What we need the payable amount, which is the final answer of the formula. We need receivable and payable figure. If you see this question, they already provides you the receivable and payable, means this note number one is no need. This note one is to confuse us. There is no use of note number one information. When we are going to use this note one information, when it's written here paid or is written here received. If it is received or paid, we have to use the information of accruals, yani BD and CD. But like this question, you can see directly they are giving you the final figures. When we are looking for the final figures, what we are looking for? We are looking for payable and receivable, and it's mentioned, is given. So if it is given, why should I do working? Why should I spend my time to calculate them again if it is given? So the income, yani receivable figure is this, and the payable figure is this. Income minus expense. The final answer will be 9270. You can see the examiner's trick, how he plays around. He is giving you BDCD, and it's normal for students. They are confused. Yes, examiner wants to confuse you guys. But if you remember this video or if you remember this question, inshallah, you will not be confused. Any doubts? There is no QCD in this question, so we have the answer, which is TTP. Any questions, please ask me, otherwise note it down. Property income for companies. In individual, we already discussed the property income. In individual, we already discussed the property income. For individuals, how we are calculating the property income? Annual rent receipt or annual rent receivable plus assessable premium then allowed expenses. In individual, we have two options. Either we are using cash basis or accrual basis. By default, in individual, it's which basis? Cash or accrual?
It's cash basis.
Cash basis is the by default basis for individuals, and if a question states otherwise, only then we are using the accrual basis. But for the companies, please note it down. The first point is, in the companies only we have accrual basis. There is no cash base for a company. Second, individuals, we are using tax year, but for the companies, there is no tax year. We will use the accounting period. These are the two important differences. Number one, the accrual basis is only the basis which will be assessable base we are using for companies.
Sir,
Yes.
could you just give me 1 minute so I can just check my internet connection?
Yeah, sure. Expenses. Only accrual basis, and there is no tax year, only accounting period. The other one, the third one is the same thing. The thing is, you remember in individual, interest on loan to acquire property is not an allowed expense. We are not deducting it from the property income. Same thing will continue here. But in the individual, the 20% of interest amount is the reducer of income tax liability. This is the very basic one, very earlier classes. If you want, you can see the property income video. You can see over there that interest on loan to acquire property for individual is not an allowed expense. 20% of it is a reducer of income tax liability. This is individual case. But for the companies, there is no banding system or nothing like that. Company is totally different. So the thing is, interest on loan to acquire property is not an allowed expense. Till here it's same. But what we are going to do with the interest expense? Simple. It's a non-trade related expense. So it will be deducted. It will be deducted from your interest income. How? Just look. Just look this question, what we did just now. Uh, here. Here you can see that what we did, we deducted the interest expense from the interest income. Same thing will happen for the loan interest to acquire property. The first thing is, for companies, the property income is on accrual basis. Okay. Then only accounting period is relevant, and loan interest to acquire property is not an allowed expense from property income. It will be deducted from interest income. It will be deducted from interest income. Till here, any confusion? Hello?
I'm just
Sorry?
gonna note down the last one.
Yes. The last, the losses. The last difference is the loss treatment. If you remember, in individual, how we are, how we used to set out the property losses, it was very simple. It was very simple. For individual, I am talking about. For individual, that property loss can only be adjusted from property income. What is we were doing? We were just carrying it forward. For property losses, if you check the video for individuals, you will find out that property loss is just carry forward. Just carry forward from property income. That's it. Very easy, very simple it was. Now for the companies, the property loss will be adjusted from total profits. You remember the TTP format. In the TTP format, we used to have total profit, and this total profit is before QCD, remember? And after the QCD, we used to have the TTP. Here, in between this, here. Here we are going to adjust the property losses. In between total profit and QCD, we are allowed to adjust property losses. Yani, in the case of individual, property losses can only be adjusted from property incomes and then it's carry forward. For the companies, the property loss is allowed to adjust from total profit in the format of TTP. That's the big difference between individual property income and property income for companies. Any questions?
No questions.
Okay, now I will share a question. Here it is. Speed limited. This is our question. Please read it out.
Speed Ltd prepared accounts for the year ended
Okay.
31st March 2022. During the year, the company received a premium of £12,000 on the grant of a 7-year lease. The building was rented out for 1st September 2021 for £6,000 per annum. It lay empty until this date. Rent is received quarterly in advance. Calculate property income for the year ended 31st March 2022.
Now, what we need to calculate? We need to calculate property income. This is not an individual. This is a company. It's not Mr. Speed. It's Speed Limited, right? So the format will be rent. What rent? Rent, annual rent. We used to write annual rent, but which basis? Only accrual basis, because this is a company and we have premium, so assessable premium, and this will be the answer. First of all, accrual basis, tax year khali, no need to consider the tax year, only accounting year, because this is a company. So when you rent it out, which date, and what is the rent of the year, and how many months is rented out during the year? Can you tell me, please? Your voice is not coming. So it's 7 months. It's 7 months out of 12 months, which is giving me an answer of 3,500. And premium. Remember the format or working for premium? What it was? 51 minus duration divided by 50 into premium amount. The duration in this case, in this question, is 7 years. It's written here, 7 years. And the amount of premium is 12,000. So 51 minus D, which is 7, divided by 50 into premium amount, which is 12,000. We will get assessable premium of 10560, and the total property income for Speed Limited is 14060. Simple, easy, same like individual, but two differences. No tax year, only accounting year. No cash basis, only accrual basis. Hopefully you are getting it. Any questions, Usman? I cannot hear you. There is an assignment, question number 15. I already sent you the handout. You have it now. This is a big question, but it's not a difficult one. Okay, this is a question. Allowed, not allowed, allowed, not allowed, this, TTP, plant and machinery, capital allowance, everything is there. So this is your assignment. Okay, so please do that one as early as possible. Okay,
Okay.
and then we can say that it's almost end of the corporation tax.